Hey everybody, welcome back to the channel. Welcome back to Taking Trades. Happy Tuesday to you. We got another drop. We all saw it. We knew it was coming. It happened. It looks like we're reaching towards that support level we talked about yesterday. We're going to dive into the charts today and talk about that a little bit more. I'm going to throw up a couple graphics about the weather because it's just sort of the same. This is going to be a quick hitter today, so watch it through to the very end and get all the information you can. And at the end, I'm gonna give you another little treat, kind of like I've been doing the last few days. So let's jump into it. All right, so weather's looking about the same. There is a cold shot coming in, but it's not gonna create all that much craziness. You can see this graphic here. We're also going to be looking at the weekend getting colder, so we're going to maintain that moderate demand going through the rest of the week. But then once we hit the weekend, it looks like we're going to get some colder weather, so stay tuned to that. We got another graphic here. So weather's kind of just been mildish, cool, moving into winter, but not fully committed yet. So natural gas isn't being sucked into our heaters. We're all just kind of waiting with bated breath, watching for Thursday's report. That's going to be a big day in my opinion. I do think we're going to get our first withdrawal. That's just the feeling, that's my gut, that's the expectations I'm seeing and reading about, so we'll keep a close eye on that. But right now, let's dive into the charts. Let's look at what happened today. I want to break down the price levels, the price action. I want to remind you of that support level that we defined as a range. Remember, it's not an exact penny level. It is a range. So we're going to look to touch that level. It looks like we were reaching for it today. It might happen tomorrow. So let's hop to the charts. Let's take a look at it. Let's digest everything. Let's come up with our plan for tomorrow. Maybe that's just sitting on our hands. Maybe it's nibbling. I don't know yet. We'll look at the charts, find out. Let's dive in. Okay, let's take a look. We've got /NGF20, which is our natural gas futures for January 2020. Let's look at this price action because it's kind of interesting. I've zoomed out just a little bit so we could take a peek at it, but you can see that all this bounce activity between these two red lines, this is kind of our zone that we were talking about earlier being yesterday. But all these bounces, and then we got the big push up, little pullback, push up, and then we topped out. Then we returned all the way back down, and we touched a few different times. Then we returned all the way back up, and then we returned all the way back down. And now it looks like what we're wanting to do, and I fully anticipate this is going to happen before Thursday, is that we're going to reach for the bottom again. We're going to go back into this zone. We did it here, we did it here. Every time we come up to that 2.885 level, that area that we've been following for a while, we return back to the bottom, and it's all the way back down. It's literally almost straight down. Couple bounces, almost straight back up, and now it's just been straight back down with one little hiccup in here. So I fully anticipate that tomorrow we're gonna see it happen. We're going to see the push all the way down into this level, and then really it becomes an opportunity for more nibbling. If you want to nibble some small share size, that makes a lot of sense in this area if that's what your plan is. Again, don't take the trades based off my opinion in my videos. Just use this for additional information to help you make decisions. But me personally, this is a nibble zone for me. This is a supply zone for me before we return back to the upside, because if we get that withdrawal on Thursday, I think so many people have been waiting for this for so long that I really think we're going to have a pretty violent up move, and it could be pretty big. So pretty excited if you're playing UGAZ. Maybe make you a little uneasy if you're holding any DGAZ going into Thursday. I'm guessing nobody will. That seems a little ridiculous. And I want to flip over real quick and look at UGAZ just to break it down, just to see what we've got going here. And first thing I'll do is kind of zoom it in. So we've been drawing all these levels. We've got all these gaps happening. The price action on UGAZ has just been kind of bizarre. The whole natural gas thing has been very interesting. We got really warm. Things are just kind of like mild. And we're just seeing these continuous dropping in price. So now what we've got is, we thought yesterday that we were going to fill this gap, and you can see what happened. We dumped back through it and filled it up. So we're down below it now, and we're actually below this support level and broke through to go down to our all-time lows. So we talked yesterday a little bit about if we broke through these levels, there is a possibility that we could go to all-time lows, which would be right around that 1225 area. If I zoom way out, you can see, I guess our low is 11 right down here. But we're getting awfully close to being back in that neighborhood. So we do have one more support level before we go lower, and that is sort of in this 1250, well, I guess it's 1238 technically is where I have it drawn. But again, it's a range and not a price point, not a penny. And so what we'll be watching for tomorrow is the possibility of pushing back down into this area and just hanging out. If I had to guess on UGAZ, I would say that tomorrow is going to be pretty much a nothing day. I think we might drift lower, we might get close to the support level, and then just hang out and do nothing. Thursday, then I think things are going to get very interesting. I think pre-market, you're going to show people are excited. There's going to be, I imagine, some movement pre-market, and then everybody's going to be just watching and waiting for that natural gas report to come out 1 hour after the market opens. So be ready for that. Let's flip over and look at DGAZ, just checking it out and see what's happening. And there you go, gaps up. And we talked about this yesterday. We said now that it's up above this 50 simple moving average, if it comes up, it could get hung up by the 200 simple moving average. Well, sure enough, look what it did. It closed and held right below. It actually broke above and then got pushed back down. A little rejection by the 200 simple moving average. So kind of interesting on the DGAZ side today. You would have made a little bit of money playing this. You might even be able to make a little more money going into tomorrow playing DGAZ, but then come Thursday, I think the DGAZ will probably dry up a little bit, and everybody's going to be looking for that first withdrawal report, which could be a really big deal. So let's flip back over to our natural gas F20. And we'll take one more peek here. So yeah, I think that we get that bounce, and then on Thursday, what I'd be looking to do is if we drop down here, so here's our plan for the day, right? If we drop down and we get down in this level, then you're nibble, nibble, nibble. When Thursday's report comes out, the thing that's going to be really interesting is if there's a withdrawal and we get that pop, I'm looking to sell my first piece. My first piece of selling is going to happen probably in that 2.65 area. That first overhead resistance level, I'm looking to take a quarter position off. Wait and see what happens. If we continue to run like wild, then I'm looking to get to the 2.70 level to take another quarter off. And then if it goes ripping even more, I'll just keep quartering out on any shares that I happen to nibble and go from there. Then if we get a pullback, we can add, look for colder weather, and then go higher and dump quarter, 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 and sort of sell into the strength. But this looks like an amazing nibble opportunity in a supply area, so be ready tomorrow to kind of see what's going to happen. If we reach for that supply zone, that's a great opportunity for nibbling, in my opinion.
All right, are you ready for your surprise? I promised this at the front of the video. I said if you watched all the way through that I would give you a little surprise at the end of the show. So you guessed it, another options trade, one of my trades, from me to you. Here you go.
All right, I want to show you another options trade. So this is on MongoDB, ticker symbol MDB. And this is a very interesting one in that what I did on this was, it's called writing a covered call. And this is where you own stock. I own 200 shares of MongoDB. And what you can do with that is you can say, I don't think MongoDB is going to go above a certain level by a certain date. So for example, if you owned MongoDB right here, you could say, all right, I don't think it's going to go above 150 in the next 2 weeks. That could be a trade. You could come over here and you could look in here and say, all right, in the next 17 days by December 6th, I don't think it's going to go above 150. And here's the interesting thing. Yesterday we talked about selling a put. Now we're selling a call option, a covered call. And all covered means is that you own the stock. So that just, the difference between a covered call and a naked call is whether or not you already own the stock. So if you look at this 150 right here, that's the strike you picked. You said, I don't think it's going to go above 150 before December 6th. December 6th is your expiration. So if you came over here and looked at this, you could then go ahead and sell a covered call against this position, and you could get paid typically when you place your order, if I click this, you can see that what I have on here, let me move myself out of the way for a second. What I have here is $3.70, but that's the bid. You notice that 420 is the ask. Now this is aftermarket, so this isn't totally accurate because there's not order flow and stuff coming and going. They're all quiet right now until the market opens tomorrow. But what I do is down here in Thinkorswim, you can see this 370, which is your bid, and then the 390 over here, which is odd. Oh, sorry, 420 is the ask. This 390 is the mid. So you just grab this and move it over, and that puts you in the middle between the bid and the ask. So when I say confirm and send, it's going to submit it at $3.90. So the great thing about this is at $3.90, if you were to do this on 200 shares, that would be 2 contracts. So 390 and 390, you're looking at $780. And that's an amazing play on this because it's great premium to get, and it's per 100 shares. So $3.90 for 200 total shares is what you could have, and then you wait to see what's going to happen. If it closes below 150, then the contract expires worthless. You just keep that premium. If it expires above 150, you still keep the premium and you lose your shares, meaning you sell to someone else at 150. Now here's the nice thing, and it's very different compared to the put that we discussed yesterday, is that when you sell a covered call, say I entered my 200 shares, at 133, and then if it goes above 150 and you get called and it expires and someone buys your shares from you at 150, well, from 133 to 150 is $17. So not only did you get paid the premium, but you also got paid at 150, so you got that $17 addition. Now, the downside is that if you own stock, the stock could then go down. And this is a position where I actually entered and the price did go down, but what I'd been doing is selling covered calls repeatedly, selling and selling and selling. And what I've done is I've got my break-even point down to 122.40. So as long as I'm above this level, this red line, then I'm green. Not fully green until you get past your entry point, wherever you entered. But for me right now, this is my break even. So I'm very healthfully in the green. You can see down here, I was in the red, here, here, and here. But now I'm back in the green. And this was just it dropped and I bought 25 shares and then it popped and I sold 25. That's all that is. But this is an example of a covered call. And what I did was just buy the shares up front, and then what happened was at the same time I went ahead and sold the contracts. I went ahead and sold the calls on them, and I went to the options chain on the call side, picked out a level that I was comfortable with, picked out a time frame, collected the premium, and then just sitting and waiting. And I'm going to put out some videos about what to do when it does breach your strike price. What are your options? What can you do when it's above that? So we'll get into that later this week. But expect some options content to come out. I'm putting it together now. I'm excited about it. I think you guys are really, really going to like it. If you like the options content, drop me a comment below and let me know. And hey, subscribe to the channel if you're new. Try out the channel for a week. 50% of you watching the video are not subscribed. So if you stayed this late into the video, you obviously liked it. So subscribe, hit the like button, drop me a comment in the comment section, introduce yourself to me. I'd love to get you to know you. The channel would love to have you as part of the family, so feel free to hit that subscribe button. Hope this was helpful. Hope everyone was green. Watch that report on Thursday, but I'll check in before then because I'll see you tomorrow.